Hello and welcome back. This is another week, a new month. We are now in December. November was good to us in terms of trading. As we were analyzing from our weekly analysis, I believe you're able to get some good entries. And like it's always, the key thing is to ensure proper risk management. That is the surest strategy when we're trading Forex or basically in the financial markets. The key thing or the key goal is to preserve your capital and minimize your losses. So this week, last week, as we had analyzed the DXY, it panned out according to our projections. And from this week, or from the monthly time frame, you can say that November was a bearish month, like we had said. Looking at the weekly, we had consecutive, you can see the sales, 3 consecutive weekly DXY was bullish, was bearish. And currently, at the moment, probably let me delete this. At the moment, you can see how it's panning out. So we can be able to identify this weekly supply, can be able to identify the weekly supply. So it's a fresh supply zone. So from the weekly time frame, we can anticipate maybe can be looking for the DXY to be bullish. Then we see a sell-off at from this daily supply zone. Okay, we see a sell-off from the daily supply zone. So that is from the weekly time frame. It's from the weekly time frame. So if it goes up and sells from the weekly time frame, then our targets will be targeting after it reaches this level and start selling off, shall be targeting the previous the low that it will have created, that it created around 102.47. Okay, around 102.47. So that's on the weekly time frame. And on the daily time frame, basically you can see this pair is creating, it's in a downtrend. Okay, you can see series of lower highs and lower lows, series of lower highs and lower lows. That's what characterizes a downtrend. And we can see that these are the areas that DXY has been testing, the previous areas. Then we have also now this other area, that level where the XY reached, and now it's retracing from that level. So we might, if from the daily time frame, this is bearish. From the daily time frame is bearish. So we anticipate now probably maybe continue the bearish move, break out, reach this area. It can reach this area and break above and bounce off, so as to come and test these weekly supply zone. Or there can be a breakout and then a retest, and we see a continuation in the downside. Okay, we see a continuation in the downside. So in the 4-hour time frame, basically in the 4-hour time frame, we can see again we have this supply zone in the 4-hour time frame. We have that supply zone, and the reason why probably we are anticipating now, maybe there can be a retracement this supply zone, and then we can see a sell-off. Okay, we might anticipate a sell-off, and the first target that we shall be looking at maybe now from the 4-hour time frame, we might be looking at this level where we had the demand. Okay, so it can reach this demand level and then retrace on the upside for some time. Okay, maybe to retest this, it can come downwards, reach this demand level on the 4-hour time frame, and come up to retest the 4-hour the 4-hour supply zone. So this is what I'm talking about. And then we see a sell-off, okay, a breakout on that, and then a retest, and then we see a continuous movement on the downside. Okay, we see a continuous movement on the downside. So But again, fundamentally, remember on Friday, it's very key. We have the NFP, and from the NFP data, you can see the average hourly earnings. They're anticipating it will increase. The non-farm employment change, there'll be an increase. And the unemployment rate, they are projecting that it will remain the same. So if this data pans out like it's projected, then it means that it will be positive for the dollar. And if it will be positive for the dollar, then we might anticipate the dollar to gain strength. Okay, we might anticipate the dollar index to gain strength. But before Friday, we might anticipate these moves. Then on Friday now, we might see probably before Friday or on Friday, these might have retest here. Then we see the upward movement. Okay, so that's it for the DXY. And the next we want to look at is gold. Let's look at gold. With gold, basically, this is what we have. This is what we have with gold from the daily time frame. So we can see from the previous level, okay, from the previous level that we had looked at, the previous we had anticipated 2022, 2048, and we said after 2048, the next level shall be anticipating is 2080, the all-time high, okay, the all-time high. This is the all-time high. So where it is at the moment, we might anticipate gold breaking, creating a new all-time high, maybe to around 2100, I mean to around $2,100 per ounce. Then we see a move downwards. We might then anticipate to see a move on the downside to this area here, whereby we have the daily supply. This area that we have the daily supply. We have a daily supply at that level. Okay, so the daily demand at that level, not supply. So let me mark it correctly. Because we have these are bearish move order block. These are bearish engulfing. Okay, it's a bullish engulfing. So a bullish engulfing gives us what we call the demand zone. Okay, so we might see gold now retrace to this demand zone, all before even making the all-time high from where it is. Once the price opens, we might see maybe a move on the downside to this demand area, and then we see all-time high created. Then now before we anticipate a fall, and our first target on the downside will be this level. Okay, will be the resistant level, the support level, the resistance that turned to be support at 2008. And then if it continues further on the downside, in the long term, we might anticipate these levels. Okay, we might anticipate the 1933 levels. Okay, the price to come all the way to these 1933 levels, right? So basically, that's what we can be able to look from the for gold. Remember, on the upside, we don't have any data because the previous high is 2081. So we don't have any data to look at the past to see where the price might go. So on the upside, we shall be working with key levels, key institutional numbers. So 2,100, maybe 2,200, 2,300 as it keeps going, okay? But before we reach those levels, like I said, two instances can happen. It can retrace from where it is to this demand level, and then we see gold creating all-time high, maybe to around $2,100 per ounce, all from where it is after the market opens tomorrow. We see an upward movement creating a new high, and then a retracement to this supply, to this demand zone. And then it might sell a little bit. We might see now a push up. Okay, we might see a push up, and now a downside. Okay, I anticipate in the long term, I am anticipating gold to reach around the 1900 level. Okay, I am anticipating. gold to retrace to around the 1900 levels. These are the levels that I am looking at. Okay, this is the level that I'm looking at, the long term. Okay, in the long term. So that's it for gold. So we keep a watch and we see what the price delivers to us. Okay. So then we go to the next pair that we want us to look at is Euro USD. Okay, Euro USD. That is for the sake of those that do not trade commodities like gold. So we go to Euro USD. So with the Euro USD again, maybe I can delete this that I have in my chart. So with the Euro USD, one thing that you can be able to appreciate from the daily time frame, we have this uptrend. Okay, we have this up channel. Okay, that was broken, and the price came back to retest. You can see here was the breakout, and now the price comes back again to retest this region. At the same time, we had the supply area. Okay, we had the supply area that the price violated. There was a very strong breakout. So this was a weak supply area. I plan to, as soon as possible, plan to do a video on how to identify weak demand areas and strong demand areas. Okay, how to identify weak and strong demand and support areas. So this one was a weak supply. It was a weak supply. And you can see the price violated from the daily time frame. The price broke out of this region with a high momentum, a bullish momentum. This is a Marubozu candlestick, okay, showing more of upward trajectory, okay. So what happened last week is we had a retracement on the downside, okay. We had a retracement that came to retest this uptrend line, okay. We had that retracement that came to retest the up trend line, the trend line on the up channel. And I would have anticipated a better retracement, maybe probably to around this area, okay, to around that area of resistance, because we have a resistance area that was broken as well. So probably maybe when the markets open, you can see with how the candlestick closed here, we might anticipate a move on the upside. Okay, we might anticipate a move on the upside. Depending on these candlesticks, or we might see a move on the downside to retest these breakout of this support of this resistant area. So this side becomes support before we now see an upward trajectory, okay? Before we see an upward trajectory. Or the market can open and then we see immediately the market push up. So if it pushes up, our first target will be the previous high that it created there. That's around 1.10196. And then if it maintains the upward movement, then we might anticipate the next level we shall be looking at is 1.10659. Then we look at the next level at 1.1148. Then the last level or the highest level here is 1.12773. That is in the long term. Okay, remember this is daily time frame, right? So we move the 4-hour time frame. We try to see what the prices might anticipate. So from the 4-hour time frame, this is what we have from the 4-hour time frame, right? So this was the high, okay, that the price created at this level. That was the last high that the price created at that level. And then we have the low that it created before creating that high. So we have this low. So this was the low. So we can say that here we had an uptrend, high highs and higher lows. So with this in mind, now we can say that what we have here at the moment is a change of character. Okay, we have a change of character. We have a change of character. This is a change of character. So we mark that. This is where we have the chart in the 4-hour time frame. Okay, that's why we had the change of character in the 4-hour time frame. And now with that, you can see the price came back to test this region, and now it's more of a downtrend. Okay, it's more of a downtrend because it's creating lower highs and lower lows. Okay, from the 4-hour time frame. So again, you can see there was we have a very key region at this level. Okay, this plays out to be a very key area of resistance. It's quite a huge area. Our area of support. This side was resistant, breakout, it became support, and now the price tried to break out, but it was unable. You can see this week closed above within the region. So we might see maybe probably from the 4-hour time frame, this is the move that we might anticipating. Here we have the daily supply. We have the 4-hour supply zone. So we might anticipate maybe price to move on the upside. So on the upside, our first target will be we want the price to move in the upside. So this is the move that probably might see if this support area holds. So we might see this move break out from that that area of resistance, and then all the way now to this demand supply area. Before now we see a sell-off. Okay, before we see a sell-off. So on the uptrend, these is the areas that we shall be looking at. Okay, the 1.09129, and then we will be anticipating the price to reach maybe to this resistance to this supply area, which is now we call 1.09670 level. Okay, so that's what we have on the 4-hour time frame. But if the price breaks through this region, okay, through this area of support, so if there is a breakout, you might want to see a retest, and then the price push all the way down to this the next support level that we have at around. So this was the support level in the 4-hour in the daily time frame, which is around 1.07709. Okay, 1.0709. So this level or this area can give us very nice sell entry. Okay, so this level can give us very nice sell entry, and this could be a very nice setup. Okay, this could be a very nice setup, actually close to 1.1 one risk to reward ratio of 1:3. Okay, risk to reward ratio of 1 is to risk to reward ratio of close to 1:3. Okay, so 3.66, a risk to reward ratio of 1:3.6, right? So that's why you'll be looking for short entries. So that is the setup. You can mark it in your chart. So that is from the 4-hour time frame, right? So the next, so once this happens, the price comes back to these levels. So we shall be looking to take partials at around this area. Okay, can take partials at around 1.09355. Then you can also take partial profits at this area 1.09134, and then wait for the price to reach our target, which is 1.08872. So we move on to the next pair, that is GBP USD. GBP USD. And with GBP USD, let me take another pair here. So with GBP USD, we begin from the weekly time frame. We see what we have on the weekly time frame. Let me delete the drawings that I have. So from the weekly time frame, basically this is what we have. So we mark what we see, right? We mark what we see. So we have this area of demand. We have a demand area at that level. and then we also have this demand area is still fresh, it's not retested. So when we have these two demand areas, how do we trade them? Okay, so with these two demand areas, they're close to each other. I would like to see maybe the price push downwards, throw a wick to this higher level, at this lower level, before we see an upward. So we can just delete this one and work with this. Okay, we can delete but let's work with this. The reason why we should work with this is because you can see this price drop down here, cover the wicks. Okay, it dropped down here to cover these wicks. You can see this wick here. So at times, depending on how the price is behaving, all these, there are those who people, when we have this long wick, you can mark up the longest wick to say that this is a supply, a demand area. So it depends on different factors. So, but let's work with this that is very fresh. Here, not retested. There's no contradiction about it. So that's what we have. So currently, the price is at this region. Okay, it's at this level. It's at this level. Then we go to the daily time frame. So that's what you can see on the hourly, on the weekly time frame. Then when you go to the daily time frame, you can see the price is creating, it's in an uptrend, creating series of higher highs and higher lows. Okay. So at the moment, this is a key resistant level, support level. So this side, it was support, broken out, it became resistant, there was the breakout, and now it is support. Okay, so price was unable to break through this support area, and the reason why we had this bounce off. And now what we are anticipating is that prices might come maybe to around this another key area here. So we have another key area of resistance. We have another key area of resistance. So we anticipate price to come to this area of resistance. And if it breaks out, we want to see a retest and then upward continuation. Remember, it's creating higher highs and higher lows. So that is the first scenario that we might anticipate, and we'll be looking these as our first target, and that is around 1.2996364, and then we look at this other level 1.31444, okay, as the next target, So the retest, if it breaks this area, then we want to see the retest of this, then an upward movement, okay, an upward movement. So that's the kind of movement that we're anticipating. So if it's unable to break through this, if it comes and it's unable to break through this area of resistance, then we see the downward movement, and our first target will be around 1.26204, right? That will be our first target. And if it breaks, probably it breaks through this area, then we want to see a retest, and our next target will be around 1.2444. Okay, that will be our next target on the downside. This area, it's a very key area of support. And then if it continues, if the bearish movement, then we want to look at this lower level here when it's retesting this support, this demand zone that we talked about at around 1.2361, and then now we might see the upward continuation maybe of the upward movement. Okay, so that's how we are projecting. And probably again looking at this area here, you can see we have this area. Remember, the price always repeats itself. Looking at this level here, you can see some consolidation, and therefore it means that there are higher chances that again at this level we might see some consolidation before now going to the upside. Okay, we shall see. We might see some consolidation before going to the upside. My bias for GBP USD is up direction. It's up direction. Okay, I'm looking for bullishness, but before the bullishness, maybe probably I said we can maybe anticipate this consolidation, the kind of consolidation we had this level, we can anticipate the same in this level so that it can go up all the way to this level to complete the buy side model, okay, the buy model, okay, the buy model, right? So that's what we have for GBP USD. So before I go to the 4-hour time frame, so note that we have said two things can happen. The market can come, the market can come, break through this resistant level. Then we shall be targeting 1.29964. A break of this 1.29964, we see a retest, and then we target 1.31444. Option number 2 is that it might reach this area of resistance and retrace on the downside. So we want to see it come to around this area of resistance. That is around 1.26272. If there's a breakout, then we see a retest and we anticipate a level of 1.24451, and then all the way to these demand area that we have around 1.23651. Okay, this is the demand area in the weekly time frame. Option number 3 is that we might see the same ranging that happened here. We might see the same ranging happening here. So some consolidation taking place here. And then we see maybe the upward movement or the downward movement. But higher chances is the upward movement. Okay, is the upward movement. Remember the chart pattern. When we have an upward movement, then we have a consolidation. Okay, we have a consolidation. Then we see the price will definitely tend to break on the upside. Okay, so this is what we call the bullish rectangle. Okay, the bullish rectangle, continuation of the uptrend. Okay, so again, what happened here, we had a downtrend, then consolidation in a bearish rectangle, and the reason we had the bearish movement, okay, the continuation of the trend. So the opposite is true. Uptrend, ranging, a form of ranging, okay, ranging in a rectangle manner, that is a bullish rectangle. So the breakout will be on the upside, okay? The breakout will be on the upside. So that being said, let's remember something. Before we go back to gold. Let's look on the 4-hour time frame for GBPUSD. We see what we have. So on the 4-hour time frame, basically, let me delete this so that you can be able to appreciate the price. So you can see on the 4-hour time frame, it has already begun the form of ranging we are talking about. So this is a range, so it's trying to range in this manner. You can see it has already begun the ranging. So we see when it breaks out of this region, then we might anticipate the upward movement. Okay, so we go back to gold because it happened the same thing with gold. So from the 4-hour time frame, so let me delete this. So from the 4-hour time frame, you can see we had the ranging. Okay, so these chart patterns are very important. So this is the 4-hour time frame, which is also key in the 1-hour time frame. So you can see in the 1-hour time frame we had this consolidation, bullish consolidation in a bullish rectangle. So we had the uptrend, then consolidation in the bullish rectangle. Then we had the breakout in the up direction. Okay, we had the breakout in the upside direction. The breakout happened in the upside direction. So we might see a retest of this breakout, then continuation, just like we analyzed gold. Okay, so fundamentally, this week, tomorrow we're anticipating the CPI for CHF. Then we anticipate also the on Tuesday we have the cash rate for AUD, that is the interest rates for AUD, and then the key fundamentals we have this week is actually the NFP, that is on Friday. Remember, NFP happens the first Friday of the first week of the month. So Friday 8 is the first Friday of the first week. Okay, the first Friday of the first week. So we have NFP. So you can see the projections here. What we're anticipating, basically average hourly earnings, they are forecasting this, the previous, this is the forecast. So they forecast, the previous was 0.2%, so they forecast an increase of 0.3%, meaning that this, if it comes out as it is projected, or as it is forecasted, meaning that this will be positive for dollar. So we have the non-farm employment change, previous was 150K, they are forecasting 185K, okay, meaning that we have close to that 5K people that have been employed, okay. So meaning that this might be positive. When people are employed in an economy, it becomes positive news for the economy, which is also positive news for the currency of that economy, because we use the currency of the economy to measure the performance of the economy or the health of the economy. So if it pans out as projected, then this might be positive news for USD. Then we have the unemployment rate. The previous was 3.9, and then they are forecasting to remain the same 3.9. Okay, so if it turns out maybe we have an increase at this, this will, if we have an increase, if it remains the same, then this other news turns out to be positive, then this means that the dollar will be positive. But if maybe the unemployment rate increases and these other ones are positive, or they panned out as planned, then it means we shall have mixed data. Okay, we shall have mixed data, because if the unemployment rate increases, then that tells you that we have people who are jobless. The rate of people who are jobless has increased, which becomes negative for the dollar. Okay, but if the unemployment rate, the actual turns out to be less than the forecast, then we say that that is positive news for the dollar, and therefore rhyming with the average hourly earnings and the non-farm employment change, this means that we shall have positive news for the dollar. So we wait until the actuals are out. But basically, from the forecast, it gives us a rough idea that we are anticipating of what we might anticipate. That is positive news for the dollar. So if it's positive news for the dollar, then it means that the dollar is going to gain strength, and therefore currencies like GBPUSD, or currencies that have USD as code currency, we shall be selling. Also, gold shall be looking to sell. Okay, but if the news comes negative, it means that currencies that have USD as code currency, we are going to buy. Also gold, we are going to buy. Currencies that have USD as base currency, we are going to sell, okay? So this is key news that we might want to watch closely so that we can anticipate the next trend for our pairs, that is GBPUSD, EURUSD, and also gold, okay? So having said that, we have looked at the technical, what we're anticipating the technicals. We have looked at the fundamentals. So then the next key thing is now for us to mark the charts. You rewatch the video again, you mark those key areas, and we see what happens when the price opens up tomorrow. Okay, so also fundamentally remember that Israel and Palestine, their talks came to a dead end. And Hamas said that there are no more negotiations. So they are propelling the war. So meaning that the war continues. So we also want to see how that affects forex market, and especially the commodities, that is gold, silver, and oil. Okay, so it's good to keep a keen eye on the fundamentals, such as the Palestine and Israel conflict, because once they happen, they tend to be very positive, especially for commodities like gold. Okay, so with that, let me keep it short and sweet, and I want to wish you a blue week ahead. So trade safely. Remember, we said trading carries risk, and before you start trading, ensure that you are well educated or you are well versed with the financial market. And also, we said that the key or the number one strategy in forex trading is risk management. Okay, so ensure you practice proper risk management. Do not risk more than 1 to 2% of your capital per trade. Okay, so that's it from me, and I wish you a blue week ahead.